Thanks for staying tuned. Midway through the last quarter of 2019, investors looking at Ghana saw a slowing economy, creeping inflation, and a currency that had declined against the dollar for 25 straight years. Barely 6 weeks into the new year, the picture has changed. Analysts say the cedi is the best performing currency in the world in 2020. Investors fell over their feet to buy into the nation's $3 billion Eurobond issue, and foreigners are piling into the country's local currency debt. Investors who worried last year about spending ahead of an election scheduled for December are now lauding the government for fiscal prudence and financial reforms. Well, let's talk to the West African senior analyst at Docker Frontier, London, Matt Kindiga. Hello, Matt. Thank you for joining us on the show.
Hi, thanks for having me.
So why are investors so much more upbeat about Ghana?
So yes, certainly investors are a lot more upbeat about Ghana, and this is for a number of reasons. One is that the country has enjoyed a number of years of strong economic growth, but the government has also introduced a number of fiscal reforms sort of to demonstrate its fiscal prudence, but also a number of pro-business reforms, which have cut red tape and also made it much easier to invest in the market.
Now, what have been the main drivers of strong economic performance, and what is the growth outlook?
Certainly, as you mentioned in your introduction, the growth outlook or the growth performance of Ghana had suffered in the mid-2010s, and we've now seen a bit of a turnaround. And that turnaround has mainly been driven by the extractives industries, so pretty significant investment into mining, but particularly gold mining. So gold has performed particularly well. We've also seen an improvement in prospects in the agriculture industry, so cocoa as well as other crops as well. Going forwards, we do expect to see a sort of moderate slowing of growth in 2020 and 2021. To around about 5 or 6% over the next couple of years. But it's not a disaster. The main drivers will shift as well. So we are expecting to see consumer spending, increasing government spending and investment to be some of the major drivers of growth this year.
And what are conditions like for businesses on the ground?
So it's really quite a mixed picture, actually. So most Ghanaian businesses, especially small and medium enterprises, will tell you that they haven't necessarily benefited directly from the strong rates of economic growth that the country has enjoyed in recent years. So this is for a number of reasons. One is that there has been quite significant volatility in the cedi in recent years. This has caused import prices to increase, and also it makes planning quite difficult for companies that are reliant on imports. Inflation has fallen, but it is coming. It has fallen, but it was high for a number of years. And also, crucially, access to credit has been very difficult, especially affordable credit in the market. However, from a multinational perspective, so companies that we advise at Docker Frontier, they are actually quite upbeat about the market. And they are investing more in Ghana to ensure that they capture the opportunity that exists there.
And so how does this strong investor sentiment and economic growth affect ordinary Ghanaian?
So most Ghanaians are, like businesses, many Ghanaians have not seen a sort of a significant improvement in their conditions or their purchasing power, but we do expect this to change over the course of the year. And this is because the inflation rate is expected to remain below 10%. Private sector businesses in the country are investing more and employing more. But crucially, the government will be increasing civil service wages this year. You know, there's an election that needs to fight towards the end of this year. And it will also be increasing investment. There's also a more optimistic outlook for cocoa prices because of this new cocoa cartel that's been established between Ghana and Cote d'Ivoire, and this will positively affect Ghanaian consumers who live in rural areas.
So what are the risks to the country's growth outlook, and what do you think could derail the strong investor interest in the country?
So I would emphasize that our base case view is that Ghana does have a pretty good year ahead of it. However, there are some risks. One is public debt, which has risen significantly in recent years. It's around about 60% of GDP. Although the government is committed to reducing the deficit, there is a risk that investors could be a little bit worried about rising debt levels. Related to that, after the election in 2021, if we see fiscal laxity this year, after 2021, the government could cut spending and investment and raise taxes as it really tries to tackle that rising public debt level. Another major risk for Ghana is the outlook for commodity prices. So, although Ghana has a fairly broad base of exports, so it's not reliant on a single commodity for export revenues, a sharper than expected slowdown in China, as we've seen China's growth is slowing because of the coronavirus outbreak there, that could affect oil prices as well as exports from mining, although we don't expect that to materialize in our base case.
All right, thank you for your Matt. Matthew Kinninger is a West African senior analyst at Docker Frontier based in London. Thank you for your time.
Thank you.
And Egypt's government plans to resume its program to offer stakes in state-run firms by the end of March, with Bank de Cairo's IPO expected to be second in a lineup of 3 companies on offer. Officials had launched the program about 3 years ago to either list a new or sell additional stakes in state companies, but moved ahead with only one before the initiative stalled amid a market downturn. The effort was part of a broader plan to revive the economy, and authorities had hoped to raise around 100 billion Egyptian pounds from the sale of stakes in more than 20 companies. The 2 expected IPOs bring hope to Egypt's subdued stock market. And the World Bank has approved 6 projects worth about $2.2 billion to support Nigerian human capital and economic development in 2020. The fund will be spent on immunization, the expansion of the digital economy, job creation, and public and private sector governance. World Bank is ramping up its support to Nigeria in its efforts to lift 100 million Nigerians out of poverty. Financiers for the projects include the Nigerian government, the International Development Association, the French Development Agency, and the European Investment Bank. And South Africa's inflation rate has risen to a 7-month high in January at 4.5% from 4% recorded in December. Meanwhile, annual core inflation, which excludes the prices of food, non-alcoholic drinks, fuel, and electricity, slowed to 3.7%, the lowest level since June 2011. According to the National Statistics Office, the increase in inflation was driven by higher fuel prices. Well, that's a wrap on the program. Thank you for watching. I'm Chimeze Obi Iwago.